Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing, and this video is going to be packed with a bunch of different charts, our favorite companies, Apple, Facebook, Microsoft, Google, the Fang Index, the Nasdaq, the S&P 500. Crypto as well has had a wild weekend. We're going to take a look at all of that, the good and the bad. And remember, here at Unlimited Options Investing, we're investing for the long term. We're not panicking, buying the dip when the market tells us to, and we still make the short-term volatility to make outsized gains in the long term. So if you're new, welcome aboard and hit that subscribe button. As always, smash that like button and let's get started. Alright, so we're going to be starting off with the Fang Index. This is on the weekly, and we see that this actually hit perfectly the top line that I drew at the beginning of that correction from September 2020. It also aligned perfectly with the beginning of this year's correction in September, and aligned perfectly as well as what we've been seeing over the last couple of weeks. So the first thing I'm noticing is that right now we are sitting right on that 20 EMA on the weekly. That has proven to be a very good zone over the past year while it's been in our ascending channel, right on that 20 or below it. Or even if it would breach it for a little bit, it wouldn't touch that 50 EMA. However, if it do continue getting downside, then we're looking at the 50 EMA for potentially the first time in a long time, which would coincide with near the bottom of the ascending channel, which we have hit several times over the past year. So let's first look at Apple, and we'll take a look on the daily. So after this big run up that we had in the middle of November from 150, we went all the way up to about 170, and we pulled back over the last couple of days, finding buying pressure again at that 20 EMA. And that is encouraging for the stock and actually for the indices as a whole, as Apple makes such a big part of it. Apple has actually held up pretty well compared to the rest of the market in general. And if we see more weakness in this one, if it does breach that 20 EMA, then the market could see a lot more weakness. But until then, Apple looks like the only thing that's holding it up for the moment in terms of equities. So Apple has a $2.65 trillion market cap, whereas Microsoft has a $2.42 trillion market cap. So Microsoft did hold the title for a little bit, probably around this area over here, and it's given it back up to Apple now. And the one thing with Microsoft, whenever, and I mean whenever, over the last 5 years, okay, and take that for what it is, whenever Microsoft was below the 20 and the 50 EMA, it has again always been an excellent buy. And until that is proven otherwise, right now, again, we are sitting really close to that 50 EMA on the daily. And this was actually my indicator for when I started buying Microsoft leaps. When we were seeing a lot of weakness in early October, we were below that 50 EMA the same way we were back in May and of March of this year, and those times were perfect opportunities to buy Microsoft. And what I'm going to do is I'm going to draw a line where we had a gap up around 310, where the price jumped up from that point all the way up to about 315. So maybe we fill the gap, maybe we don't. That would coincide where it always has been a good buying opportunity below the 50. Alright, and next up we have Google stock. This has a $1.88 trillion market capitalization. And Google is one of my favorite companies in the sense that it is such a massive company, yet it is growing as if it is not one. And they have so much growth into the future with YouTube, their Android, everyone uses Google search. They are such a mammoth of a company that is just getting bigger. And very similar to Microsoft, whenever it's been under the 50 EMA, for as long as you can see, it has always just been buy. It's just going to continue growing into the sunset. Not much more has to be said with that one. You just buy it on weakness for the long term. Amazon has been on a very sideways, choppy motion for the better part of the past year. In my opinion, I think it's eventually going to be breaking out, and it's just biding its time. We've seen Amazon do that in the past where it's had, I think, like a year and a half of sideways action from the middle of 2018 all the way up until the pandemic started. This one was trading sideways and not really going anywhere, and then eventually ripping up higher, and this could potentially be forming once again. And similar to Google, Amazon will continue getting bigger as long as the eye can see. And when we zoom out and take a look at the weekly, we wanted to hit that 50 EMA, which has been a pretty great buying opportunity over the past 6 months. We have bounced off of a few times. We went below it in October, but we bounced off of it in March. And we can see even dating back to 2019, that has been a pretty good spot as well. All right, Tesla. So we're still looking at the weekly. And with this one, the major zone that everyone's looking at is just above that $900 mark, that 910 mark, if we get there to fill in that gap. Because if we do, I think there's going to be a lot of buyers at that 900 level, but we also have to observe that 20 and that 50 on the weekly. Tesla has been known to go on a big run and consolidate and potentially even fall 20, 30, 40%. We've seen it a handful of times over the past year and a half. Tesla goes up a bunch and then it comes down a bunch and consolidates for a bunch and then goes back up a bunch and so on and so on. And that's probably going to continue happening for a very long time with Tesla stock. I know a lot of people will think there's no way Tesla's going to go below 800 or 700, but we've seen crazy things in the market. It is possible. You have to be prepared in case it does happen, but what a gift that would be for the long-term investors to nab up Tesla again. Facebook stock, and this one has not had a good time over the past month and a half. It's been very rocky. It had a great beginning of 2021 and it's fallen off considerably into correction territory, now down well over 10% from its all-time highs that it hit earlier in September. We're still looking at the weekly, and this past week was pretty rough. Look at that big red candle. We started off at about 340, falling all the way down to 306. We're now below that 50 EMA. I am expecting Facebook to recover in the short to medium term, especially using this resistance point from September of 2020 as a potential new support line, which coincidentally was the low back this past week. So I definitely want to see more recovery moving forward. This could have been enough fear in the market to trigger a bunch of stop losses that were placed after the lows of the end of October. When we take a look at PayPal stock, we see this one on the weekly has been down how many weeks in a row. There has to be some kind of exhaustion. We're very oversold on the RSI on the weekly. So I had these lines drawn from before, and after this huge sell-off, I've drawn new lines coinciding with this previous price action from a year ago. We are so disconnected from those moving averages. Everything in the financial sector has just fallen off a cliff as of late. See a massive volume, a lot of selling pressure. PayPal is that one stock in the market that everyone is kind of eyeing and seeing how low can it go before the buyers really step up, and I can see this one really rebounding when they do as such a large cap company. Likewise, taking a look at Square, this one opened and closed below that 50 EMA on the weekly, and what a big red candle. We're seeing lows that we haven't seen since a year ago. Is it time to buy Square stock right now? And we're seeing a lot of weakness across the board with a lot of hyper-growth companies. Taking a look at the put-call ratio, so this is kind of like a fear and greed index in a way. So essentially what this tells us is how many puts are being placed versus the amount of calls. And usually when we get to the top to exactly where we are right now at around 1.2, a lot of puts are open, meaning there's a lot of fear in the market. And when do you want to be buying? When there is fear. And what are we seeing on the CNN Fear and Greed Index? We are now at extreme fear, whereas a week ago we were just at fear, and a month ago we were at 82 extreme greed. So see how fast it can switch from one side to another. Usually when you see the fear hit this point, it could be a good indication that the sellers are exhausted and it's time for the buyers to start opening some calls at these cheap prices. The 10-year Treasury note fell out of the channel, and when everyone has been talking about inflation, look what's happening. 10-year note is falling off a cliff, not to mention US oil, and one of the main commodities in the world that was white hot, or should I say black hot, considering it's black gold, haha. Is it going to recover, or is it going to hold on to these levels? The Nasdaq right now, we are sitting right on that support line where previous resistance was. See how that perfectly aligns near the 50 EMA on the daily. We also have the bottom of our ascending channel that's still intact. We're still making higher highs. We're still making higher lows overall. So although things have been very volatile, there's been a lot of turbulence, we also have to understand that we're still within the normal levels that we've been for quite a while now. S&P 500, similar idea. We're still within those ranges that we've been trading in for a long time. We're still pretty close to that 50 EMA, even though we're below it. Similar to how we were back in early October, end of September. All right, and Bitcoin. Oh, what happened? We went as low as 2,000, 43,000. Very quickly, actually, even if we go to the 2-hour time frame, we see how quickly it happened. Within a 2-hour time frame, we fell from 50,000 all the way down to that 42,000 mark, and then quickly jumping back up within a 2-hour time frame. This week, what we want to see is whether it tests again this 42,000 mark, or if we see a rebound and are able to test the $60,000 mark again, we could be back on our way towards 67,000. It still has a lot to prove in the short to medium term. Ethereum, very similar idea. Within that 2-hour time frame, we fell from $4,000 all the way down to roughly $3,500. So very, very quickly, then jumping back up to $3,900, and now we're seeing a little bit more of a recovery. Let's see if we can consolidate and continue recovering. And Cardano, it looks like we could potentially be making the beginning of a double bottom, but if we see resistance at this 20 EMA, we could continue going back toward the downside. But if we break through that, that could be very encouraging as a double bottom play. I know traders are definitely eyeing that. And gold and silver, it's been not the greatest for them either. Very choppy, very sideways, very difficult to read. Silver, same idea. We're still in a downtrend. And that's the end of my video. Let me know in the comments below. Are you buying the dip? Are you waiting? At what levels are you going to be buying which stocks, which ETFs? Let me know. As always, subscribe and like, and I will see you in tomorrow's video.